Hey everyone, welcome to Toonie Talks. If you're Canadian and want to grow your money tax-free, you've probably heard of a TFSA. But what is it and how does it actually work? In this video, we'll break it down in simple terms. So by the end, you'll know exactly what a TFSA is, how much you can contribute in 2025, and how to use it to build wealth. What is a TFSA? TFSA stands for Tax-Free Savings Account. It's a special account created by the Canadian government in 2009. The magic of a TFSA? Any money you earn inside it, interest, dividends, or investment growth, is tax-free when you take it out. Contribution limits in 2025. For 2025, the TFSA contribution limit is $7,000. If you've never contributed before, your total room since 2009 is about $95,000 plus, depending on age. Each year, the government adds new room and, if you don't use it, it carries forward. What can you invest in? A TFSA isn't just a savings account. You can hold cash, GICs, stocks, ETFs, and mutual funds. Think of it as a basket where you choose what goes inside. TFSA versus RRSP. Unlike an RRSP, TFSA contributions are made with after-tax money. No tax deduction up front. But when you withdraw from a TFSA, it's completely tax-free. With an RRSP, withdrawals are taxed as income. Something to remember about your TFSA? Don't overcontribute. The CRA charges a 1% penalty per month on the extra. Don't day trade inside a TFSA. The CRA can tax you if it looks like a business. Don't forget, if you withdraw money, you can't recontribute until next year unless you still have unused room. So to recap, a TFSA is one of the best tools Canadians have for saving and investing. In 2025, you can put in up to $7,000, grow your money tax-free, and use it for your financial goals, whether that's retirement, a house, or just a rainy day fund. If you found this video helpful, hit subscribe for more Canadian money tips every week here on Toonie Talks. Question for you, what's the first thing you'd put in your TFSA? Savings, ETFs, or stocks? Drop it. In the comments, we'd love to hear.